Okay, and we are live. Good morning, everyone. It's Friday, the 9th of August, and tomorrow is my birthday. So I'll post the link for willing donations to my cause. That's all right. So yeah, it's been like a momentous week. Last Friday actually from after we did the last session with the announcement of the non-farm payrolls announcement on Friday. And this week has been a reaction to what happened last week. So we'll be first of all try to unravel what happened, and then we'll see we'll see what it means for the months forward and what it means for crypto as well. Okay, let me start sharing my screen. All right. So let me go to last week. So we had a couple of kind of like important events. Where am I? Last week. Where is it? Where is the Japanese? So we had first of all the Japanese rates. They were raised aggressively for Japan. There's been in negative rates for a long time, from 0.1 to 0.25%. And then the same day, the US kept the rate at 5.5%. The pound the day after reduced interest rates, again started the cutting cycle like it's already happened in Switzerland, in Europe and Canada and so on. And but this was the big announcement that sparked everything. Okay, so it was the non-farm employment change, which is like yearly, almost like a snapshot of the health of the American labor market. And that's gone down from 179,000 the year before, and with expectation it will stay pretty much the same to 114,000. So immediately the market repriced a lot of things, and the two things that combined this announcement with the Japanese announcement of increase in interest rates caused pretty much a tsunami in the markets. Now, why is that? First of all, the market basically repriced expectations of what will happen in the American economy, and not only changing the expectation about future rate cuts, but also repricing the expectation that we could actually hit a recession. So let me just show you a few graphs. Sorry, this is about crypto, but we'll come back to that later. But this is pretty much like examples of previous recession. So you might have heard about what is called the inverted yield curve. That measures the yield on the 2-year bonds compared to the 10 years. Okay, and in a normal economic cycle, the 10-year yield would be higher than the 2-year. But now, when this is inverted, it means that the short-term interest rates are higher than the long-term interest rates, and that causes, in pretty much every case that has happened, has been followed sooner or later by a recession. Now, the length of time. So this graph starts from 0, which is when the yield curve goes inverted, to the start of a recession. Can you see now on the left one? Can you see this green line? This green line is when the yield curve stopped being inverted. And in many cases, especially if you see what happened in the 1980s, also what happened in 2001 and then in 2008, you can see the recession, which is described pretty much by when the job creation goes down to pretty much flat or negative. In all these cases, you can see that the actual recession started after the the cuts had already started, the interest rate cuts had already started, and the yield curve has stopped being inverted. Okay, so because the effects on the decision that are taken by the central bank take time to work their way into the economy. So where are we now? If you can see, this inversion lasted anything from 9 or 10 months to, in some cases, 21, even 28. From 9 to about 21 months. And where we are now, we passed 21 months since the yield curve went inverted, but we haven't seen yet the effects. So we haven't gone into a technical recession yet, and the job creation is still above the 100,000 jobs per month, which is which is still above the level where we would consider this as a recession. Now, what's the cycle? The cycle that we follow in any kind of like recessionary market. First of all, the central bank starts, raises rates aggressively. Then they get to the point where the market starts signaling that the conditions are too tight. So basically, this yield curve inverts. That's the way the market is telling the authorities actually, you tightened enough. Now, this curve then lasts for anything, this inverted curve from 12 to 27 months, looking at the past. So then the economy slows down. We have a late cycle yield curve steepening, and finally, we have a recession that occurs. Now, the market at the moment, following those announcements, is repricing as if we are already in step 6. Okay, so kind of a recessionary situation. The data instead is telling us something different. So we are between step 4 and 5. So we haven't got to step 6, but the reason why the market is pricing that in is because of basically is discounting all the greed that was present in the market before this kind of adjusting that was due to, as I say, what happened pretty much last week. But when we look at this, what the situation is today of the non-farm payroll and kind of the job creation compared to when we moved on to the 2001 and 2008 recession, can you see that in those cases the job market was considerably worse than when we are today? So we haven't quite got to that stage, but we are there, as you can see by the slope. We are heading in that direction, and this is why every week we look at the job market, and why we do this is because this is what the authorities are really keeping under control, and this is what will then push them to take action. And if we look at that, this is the market implied probability that the FAT will cut 3 times in a row by 50 basis points each time, so half a percentage point. Where before we can see the probability of this was pretty low a few weeks ago, just about 10%. Now, all of a sudden, following last week, this almost like 1/3 probability that this is going to happen. So this is like statistically significant levels now. 1/3 is actually very, very significant. There is a good chance that this is what actually will happen. Oh, sorry. So what caused this? So that's the crypto thing that we're going to go into a little bit later. So the reason why we went into get this thing out of the way. The reason why we went into this is, as I say, part of it like repricing of the yield, and this is like something that, I mean, in history has hardly ever been seen before. Let me just show you in. Sorry, you go back. Maybe let's have a look at the, at one point, we went on very quickly. Can you see here? This is last Friday. Okay, the 2nd of August, like 1 week ago. Okay. Move. Oh yeah. Okay, can you see what happened following the announcement? And see what the market thought of the news. So very quickly, we went from 4.15% to 3.6%. Okay, so that's basically like half a percentage discount, basically just almost like discounting as it had already happened. Okay, and this is like in such a short period of time, it's really unprecedented. When you think about it, we got to an interest rate of 3.6 yield, sorry, of 3.6%, when the current interest rates are 5.5. It's like the difference in yield is staggering. Okay, and so this all started even from higher up. So on Wednesday, when we had the again the rates from Japan and from the US, we were at 4.3, almost like 4.4%. So 0.8% in 2 days. Okay, it's really big, and this is what also caused the kind of the market crash, because mainly is down to I don't know, some of you that have done trading with me maybe will understand this. There is such a thing in foreign markets called as the carry trade. So borrowing money in a currency that's got a very low interest rates and then investing it in currencies that pay a high interest rate. So in this case, the main funding currency for a lot of people doing this against, so the people that are doing it against the US dollar, but also a lot of people did it against the Mexican peso, because the Mexican peso was paying 11%. The Japanese yen had negative rates. Okay, so pretty much you could borrow at zero interest on the yen, and they pocketed all the difference. But for it to be positive, these kind of carry trades, you need very low volatility. Okay, all of a sudden, what happened is that with Japan changing the interest rates, they made basically this holding these trades costly. Okay, and at the same time, this strengthen the yen, so making it then causing, let's say, liquidations of a lot of this carry trade, because people are kind of stop losses that caused basically in the market you had a lot of yen being bought and US dollars and other currencies being sold. So for a while, we saw that the yen was the only currency that was going up and everything else was moving down. And also, just you got to consider that the yen investors are some of the biggest investors in bonds. Okay, and the way that works is, it only works when the difference between the interest that they receive in foreign bonds once is hedged against the difference in interest rates is more than the yield that they can get by investing in yen bonds directly. Now, even if Japan has increased interest rates, that hasn't moved at all the yield in Japanese bonds. They have remained at 1%. Okay, so that hasn't changed at all, and the reason being is that the Japanese economy is judged to be not strong enough to take the extra interest rate. Okay, because it's very obviously having positive interest rates means then higher costs for businesses at a time when the Japanese economy is very weak and structurally is weak for fundamental reasons. So this has caused basically such a big tsunami that the Japanese governor of the Bank of Japan actually had to come out and say, actually, we're not going to raise interest rates anymore in the futures, until the markets have stabilized, because we don't want to cause. They realized, obviously, they were at the start of this market being unsettled, and that, in a way, this came out this week, and this is what also has then let prices settle again. So we are seeing then what happened in the markets are recovered. The bonds as well are kind of like been repriced higher from 3.6 to about 4%, but still levels that are quite lower than where they were before. Okay, so I've been telling you for a while now, as the bond market was no, I'm not looking at the wrong. So the bond market was primed for an increase. So, and this is what was caused by, last week after Wednesday. If you bought some like TLT, which is an ETF that invests in 20-year plus expiry bonds, you could have made 9% in less than a week. Okay, so this is what happens. What happens when the yield go down, bonds go back up. Okay, now things have settled again, but we're still at 4% higher than we were on Wednesday or last week. Okay, so that's the reason why I've been telling you that investing in bonds is cyclically correct right now. This is what I've told you, and if you remember, if you go back, we've started talking about this in April. So, and that was the nice entry would have been below 90. We already would be today at about where are we now? 6.5% increase in capital value, plus these bonds at this price here, we're paying about 5%. Okay, so while you're receiving monthly dividends around the 5% area, the capital that you're holding is going up in value as well. Okay. Now, having discussed that, let's have a look at what effect this has had on assets. So we look at the S&P 500. Let me just. So this is what happened following. We were here on Wednesday. So we were up here on Wednesday. Okay, and we can see what a nice drop we had. Like almost like a 9% drop in a couple of days. Now we are somewhat recovered. We're hovering around this supply point up here, where we're still down about 4.5%. from where we were last week. Now we go and have a look at instead at Bitcoin. Sorry, let me go back to another slide. And again, this is what happened to the price of Bitcoin. Obviously, Bitcoin being a volatile item. Sorry, I need to get this out of the way. It was my Zoom controls that was in the way. So this is what happened to Bitcoin. Okay, down 30% again in a couple of days. I mean, just like this happened during the weekend, so it's a little bit longer because obviously, stocks and shares don't trade at the weekend, but Bitcoin does. So a lot of this drop happened on Sunday, but we are talking about from 70,000 to 49. I mean, this is huge. 30% in a short period of time is massive. And obviously, if 30% happened to Bitcoin, what do you think happened to the rest of the markets? Even like the altcoins have dropped even more than that. So even if we see this, and obviously this is massive in 3 days, but when we put it into perspective, Okay, we are still hovering. So we go back to a daily chart. We are still hovering, and look at where we are right now at a price level. So this is where we are at the moment. Okay, so we are at a price level that Bitcoin has been at in the past only for a matter of a few weeks. Okay, so we are at the top range of Bitcoin historical price. Okay, there's only been broken this year, but until this year, the maximum was 70,000. Now we are at 61,000 right now. So we're just about 15% away from the old all-time high. But again, what are the expectations? Let's go back to the 2020 and show you what happened then after, because that was the last halving, okay, which happened in around the end of April 2020. So this is the price action, make it a little bit bigger, between April and, again, let me get the zoom controls out of the way, between April and end of July. Okay, so you can see pretty flat. Okay, but even this relatively flat activity that followed, as you can see, this is the drop in March for the pandemic, and then we recovered to the levels that we had before the pandemic, and we kept that for about, April, sorry, this is May, June, and July, 3 months. Okay, following that, then we had August, September, October, another 3 months pretty much of being flat, but at a different level. So already from here, from the low in April to the high in September, and then before, like, we had the next price jump in October, it's a 50% increase. Okay, and that's that step one. Step two, from October to December, and this is before, this is, so by this time the bull cycle hadn't even started yet. So this then from October to December, the only thing we did is just go back to the old previous all-time high from 2017. So there was no bull cycle yet started, but we had a 50% increase from April to August, and then another 60% from October to December. Okay, so in total, from the low that we've had in April, and I'm not going from the all-time low because that was like exceptional due to the pandemic, we had an increase of 150%. Okay, and this is like, it looks big here, but I haven't even shown you what happens afterwards. Okay, so we haven't even gone into this. This is the actual bull market itself. Okay, so even without considering this, we've had from here 150% change. So let's go back to present day, and let's go back to, so again, this is when this box here is when the Bitcoin ETF was launched. Okay, so I'm not even taking it from here. Okay, I'll just take it from this, when we established this base down here. So from down here, the increase has been 45%. It's something, does it ring a bell? Okay, so what we've seen in 2020. Okay, from April to August to end of July. Okay, increase of 45%. Now, if we go back to this low that we hit. So I don't even do it from here, even because we've gone a little bit lower. So now from this low, we were to repeat what was done into 2020. It would take us to it was like about 56%. Okay, so it would take us to pretty much the same situation as we were in 2020. So it would take us back to the all-time high, which this time was in March. So it would be beyond where we were in the previous all-time high from 2021, but we'll still be close to the high in March. Okay, so that would take us to probably around 75,000. Okay, but then after that, whatever that range looks like, we will have to think about what happens then in October. Let's say from pretty much here. So from October to December would be something like another 50% pretty much from here. Oops, no, it's not even big enough. But generally speaking, so without, numbers are not that important now because we're just like speculating. But, we should see then levels of, close to 100,000 before the end of the year, if the same playbook was played out as it happened in 2020. Okay, so moving from one band, so we already moved from kind of like one band to the second band. The other move would take us down to basically to six figures. The other thing I wanted to show you is the Ethereum, price of Ethereum. Okay, sorry. First of all, let's go back in Bitcoin and let's look at, this is when the Bitcoin ETFs was launched. And because of, we had Grayscale in there. Grayscale was existing already before the launch. And the effect of the launch of the ETF is that it became a lot easier for people to get out of their Grayscale position. Because before that, there was quite a barrier to exit, because it was quite costly to, so you had to sell your Bitcoin shares, the Grayscale Trust at a discount. With it being converted to an ETF, it meant that there was no barrier to exit anymore. So people started selling, obviously, the shares, because this thing has existed for years. So a lot of people would have bought the shares when Bitcoin was, 15,000, and or 20,000. So it's a big increase in price, and obviously people want A, to cash out, and B, to actually, if they want to keep it, they transfer it to other ETFs. They have got a lower cost basis, because the Grayscale ETF is the one that has the highest fees, and more than 10 times as much as all the other ETFs. So you see why the market had first to absorb all that volume, that selling volume from Grayscale, before it actually started growing. So the same thing is happening now with Ethereum, since the ETF was launched on the 23rd of July. And you see here, this box is when from the launch of the Ethereum ETF. Okay, now just get rid of these. I'm not relevant right now. So we can see the decline in price, which is being, enormous. Again, 40% drop in price with Ethereum. And if you had been, following this, and I've done the same thing, that, there obviously it was kind of like obvious to me after we've seen of all this on Monday. I actually bought some of this on Monday, because I think, well, you're not going to get Ethereum back at these prices in the near future. So it was like a huge buying opportunity right here. But if we go and look at this, and what's going to happen to Ethereum and the effects of the ETF in the next few weeks, we have to look at CoinGlass. You can see the Ethereum ETF overview here. So can you see the effects here of the Grayscale Trust, which became an ETF? It's actually sold since this was launched on the 23rd of July, 690,000 Ethereum. Put it in US dollars, 2.25 billion selling pressure. Although all the other funds are green, the total effect is almost like 400 million of selling pressure on Ethereum. But let's have a look at the trend. So we started on day one, like 500 million sales, 300 million, 350, 350, 200, 120, 130, 78, 61, 46, 39, 31, 20. Okay, so you can see that now the selling pressure is getting less and less and less. And this, then you can see the total effect now. We've gone from having pretty much like a red wave to now we start seeing green days. okay, there is a buying pressure that is positive. Like this week, for example, 5, 6, 7, 8, so we can see 40, let's say 50, 150, 150 positive, 227 negative. So there's been like a positive effect of the ETFs on price. Obviously, the ETFs are not everything. So the price of Ethereum is not just the ETFs, but basically the ETFs will give a push in either a good way or a bad way. And to begin with, you can see the push was very bad, and now the push will be good. Okay, so you can see what's going to happen right now, but also interestingly, let me go back to this, and I want to show you a few things. Where is the? You don't know. Sorry, I had a. Oh, that doesn't matter. I haven't actually taken a screenshot, but oh no, yeah, this is the one that I was looking at. So if you can see the BlackRock balance and balance change, this is the yellow line, okay, and the blue line is the price. So when the price dropped by 30%, not a single Bitcoin left the BlackRock ETF. Okay, so that will tell you the effect, long-term effect on the ETFs will be. As you can see, it's been like accumulated Bitcoins over time, with hardly any, because this is kind of like there are long-term positions that are being accumulated. They're not as, these ETFs are not really used by traders that can trade better than that on Binance, on other exchanges at much lower cost. And so this is the long-term effect of the ETF once it starts accumulating. Okay, and other things that are really interesting is how Bitcoin now has been part of the political discourse. Okay, and look at this. This is Cory Bush that voted against all major pro-Bitcoin and crypto legislation in Congress. Has actually lost the primaries. So that's the primaries to being confirmed as a candidate for their own seat. Okay, so this is why you see Trump being at the Bitcoin convention, and this is why even Kamala Harris at the moment has given like a lip service to the fact that, oh, actually, yeah, she's pro crypto as well, but she's not taking any consideration, or she's not making any efforts to talk to the crypto voters. But this is telling you that this is something that is now matters to politicians that are facing. So this is what changes the mind of congressmen. Okay, this is somebody that is sitting in Congress right now, and other people will be very aware of this. I'm thinking, actually, she lost the primary to another Democrat, and that may or may not be the main reason why that is happening, simply because she was against crypto, where another one is a lot more crypto friendly. And this is just another musing talking about price and looking beyond what's happening, looking in the next few years. If we look at Bitcoin, just a little bit of simple math, all wealth assets in the world are 500 trillion, roughly. Okay, so if Bitcoin was to represent all of this, which is never going to happen, would be like 24 million per coin. Okay, at today's price. Now, what is realistic? Even big asset managers like Fidelity recommend a 1 to 3% allocation, okay, into Bitcoin. So if we assume 3% of this over time, is not something obviously we'll get to tomorrow, but 3% of the world assets being represented by Bitcoin, that would take us to a valuation of about 700,000 per coin. Okay, so when we think about it over the long term, this is the kind of like very, very large bound that we can consider, with a very maximum of, in the millions, but a very reasonable expectation that it can hit the lower bound. of around 700,000. This is why you see all kind of like whales accumulating, even during these market crashes. Big buyers, big wallets are accumulating more Bitcoin rather than selling, because they have this in mind. They know what's coming around the corner. Okay, so and this is what the short-term crypto market has been in 2021. Kind of like from being like really sad because it's over, or being happy because we're back, because we're being extremely happy because things are going really well, and then going back in a cycle and repeating this over and over and over again. Okay, but what I always tell you is just that forget about this, zoom out and look at where you are going in the long term. Things can change completely perspective. And another big thing, I don't think I got something to show you here. Let me see if I did have a couple of screenshots. No, but another important thing, I think I showed people yesterday, but another important thing to consider is now there are two of the major US high street banks, okay, Morgan Stanley and Wells Fargo, that are now approved the Bitcoin ETF to the army of financial advisors. Okay, what does that mean? So these are over 20,000 financial advisors in the US, which at the time were not allowed to recommend the Bitcoin ETF as part of people's portfolio. So people could still go and buy the ETFs on an execution-only basis. So they could go to Morgan Stanley and say, I want to buy the Bitcoin ETF, and they would buy for them, but they couldn't advise them to do it. Now, the advisors themselves are allowed to recommend that. Okay, so again, when you use, so these are advisors that manage people's pensions, manage large funds for people, investment funds, can now recommend Bitcoin. Again, it's not something that will have an effect on price tomorrow, but is a cumulative effect, a little bit at a time, that will happen over time. Even smaller things like where's going glass? Even smaller things like the Hong Kong ETF, which is tiny in comparison to the American ones, but just a small thing like the Hong Kong ETF hasn't accumulated a lot of Bitcoins, but put in US dollars, I'll say in the US we are 17 billion, but this is still $250 million. Okay, now Hong Kong is tiny, but if we start summing up, okay, the American ETFs, Canadian, Japanese, and so on, all the ones across the world, because now it's not just available in the US, there are in other countries. You can buy now Bitcoin in Switzerland, Bitcoin exchange traded funds in Switzerland. In Japan is being talked about approving a Bitcoin ETF. So this is like a snowball effect that slowly will hit Bitcoin price. When will that happen? It's probably going to have the same time as we've seen in the past. So we should be seeing prices start moving towards September, towards the end of September. But it will hit nonetheless. Obviously, current market conditions and if we hit a recession or not can have an effect on when these things will happen. But the main reason why we saw, go back to Bitcoin, the main reason why we saw this in 2020, what was this? Do you remember what was this in the economic cycle? What was happening at this time? You remember? Anybody can tell me?
COVID.
Covered.
Yeah, so after COVID, what happened after COVID? What about the furlough? People being
Money
paid.
was pushed into the economy.
Yeah, so this is the easing cycle. So the easing cycle, that when basically money became cheaper. Okay, and especially in the US, you're talking about people were given a stimulus check in their pockets to spend. Okay, so what's happening right now in 2024? as we are facing a recession, what is going to happen? Interest rates are going to go down. So that means that translates into money gets cheaper, and the monetary policy it's easing again. Okay, so this is why then there will be a jump in an asset like this for simply for that reason, and eventually it will not just be this, but will be stocks and shares. One things are being washed off, and price have got to a sensible level again, and the leverage has been kind of like eliminated from the market. But this is the reason behind why certain jumps in price are going to happen at a certain time, is because of the monetary policy behind it. All right, so I think we're coming pretty much to the end of this. There's time for a couple of questions, and then we'll call it a day. So I remember that now this finishes about quarter two, and then we start the AIW session at at 9 o'clock on long-term investing. Okay, any questions?
Morning, Luca. Morning, everyone. How do I join that next session? It's not the one with Jonathan. This is another one.
No, this is I've given your details to Paulina to contact you. I don't know if she's done it yet or not.
Would I receive something on email?
I'm not sure actually. I could I will contact Paulina again, saying to give you to message you on email. But you should have. So you need to become a member of AIW if you want to join those sessions. You just restrict to the AIW members. We have sessions every day on different aspects. On Friday I run a long-term strategic investing, long-term wealth session at 9 o'clock every day, and other days we have sessions on different subjects, from mindset to sorting out your portfolio to other things. Okay. Hi, Chad.
I'm so good. What an interesting week. I'd love to join your long term. Who should I contact?
It's on the AIW calendar.
Great.
The Friday session is the same. So all the webinars are on the same link. So like the one that I think you did one on Tuesday. It's the same link, basically. The same link.
Okay. Super. I look forward to that. See you just now.
Yep. So if you're 10 minutes.
What an interesting week, eh?
Yeah. Yeah, you could say that. Okay. Any other questions?
Luca, do you feel like America is heading into a recession now?
Sorry, say again. I couldn't hear you.
Do you feel like America is heading into a recession?
Yes.
Yeah?
Yes. And so there are now, the expectation is that, so there have been people just already asking the Fed to not only to cut interest rates, but to even cut them in between meetings. They're saying it needs to be done and needs to be done quickly. So there's going to be a mounting pressure, especially if the job numbers keep coming down negative, or at least declining, to do this fairly quickly. And it has happened in the past when decisions have been taken even before a monetary policy committee meeting. So it could happen. And expectation now is that where before there was expectation of no cuts for about 12 months. Now the expectation is between 5 and 7. Okay, so by the end of the next 12 months, we should be our interest rates at 4% or below. Yeah. And also, what always happens is that when they start cutting, this always happens too late. So it has, because obviously they are worried about inflation, but inflation starts going down to really low levels when people can't afford to do anything. So they can't afford to buy stuff, obviously has an effect on the people who produce the things that they should buy, and then it filters through on the results of the companies and on the stock exchange and so on, so it's it's quite a cascading effect. And by the time they start cutting, it will take a few months, and during those few months, people are still hurting. There was a I don't know, just very quickly before I cut, let me just give you another thing to show you for a couple of seconds. So this is like showing you that credit card debt has reached another all-time high of $1.14 trillion, a 6% rise year over year, and also delinquency has gone up. So people can't pay the credit card debt, and so that again, it's an overall effect of people spending their disposable income on paying debt rather than buying stuff with it. So it's a gradual effect, or the conditions for people, and as a result then for businesses, are getting progressively worse. Okay, and so that at some stage needs to hit the economy, because it stops growing after a while, and then that's when the authorities need to then ease to allow the economy to start growing again, and jobs to be created. Yeah, so definitely, technically we'll see if there's going to be a recession or not, but at this stage it's becoming more and more probable.
Thank you very much.
Yeah, no problem. Okay, guys, so I will need to close the session right now. Just a reminder, everybody, Jonathan is not here today, but as usual, if you want to, you can go to his Cardano base session, which starts at 9:30 every week. If you're interested in knowing exactly how things are going on in the decentralized world, obviously Jonathan is focused on Cardano because he's a Cardano stake pool operator, but it gives you an idea as well of how things are done if you're going off the centralized exchanges and you want to see really what's going on in the blockchains. Okay. So for the others, for those of you that are part of AIW, if obviously you are interested in long-term investing and strategic investing, today we are going to talk about ETFs, and then obviously we open the session to your question, because mainly my talk is not like here where I talk all the time. I will talk for 10-15 minutes and then it will be answering your questions. So bring your questions with you, otherwise the sessions will be fairly short. Okay, so again, 10 minutes to go and refresh yourself, and then we'll see you on the AIW link. Okay,
Thank you very much, Luca.
no problem. See you all next week. All right.
Thanks, Luca. Always interesting, eh?